Hi guys, in this video I'll talk about the accounting cycle, mainly emphasizing on how to make journal entries. Journal entries are a record of all business transactions and the first step to the accounting cycle. The accounting cycle is the holistic process of recording and processing financial information in a company, from when transaction occurs to their representation in the financial statements to the closing of the account.
Yes, a transaction first must occur in a business to start the accounting cycle. Example, purchasing of office supplies, paying the salaries of employees, making a loan, selling items or delivering a service, and so on. These transactions are recorded in a journal, which are then posted to their individual accounts in a ledger. The ledger shows a breakup of all accounting activities by account. Balances for each account obtained from the ledger are listed to produce the unadjusted trial balance. Adjusting entries are made for the period covered, and the adjusted trial balance is produced reflecting the corrected balances. These balances are used in producing the financial statements. At the end of the accounting period, the revenue and expense accounts, being temporary accounts, need to be closed and zeroed out, thus the end of the accounting cycle. These accounts are closed so as not to add them to the next accounting cycle. So now, how do we record journal entries? What we need to bear in mind is that first, there are always at least two entries for every transaction. That is a debit and a credit. This is termed as the double entry method in accounting. This means that there are always at least two accounts affected in every business transaction. Second, assets and expense accounts increase with a debit, liability and equity accounts increase with a credit, and vice versa. Third, debits and credits are always equal. Debits are on the left side and credits on the right side. So for example, a company purchases inventory worth £10,000 which is payable next month. We need to think of how this transaction impacts the accounting equation assets is equal to liabilities plus owner's equity. So we need to consider which accounts are affected by this transaction and determine if there has been an increase or decrease. So a purchase of inventory on credit means that inventory, which is an asset, has increased, and the accounts payable, which is a liability, has also increased. We did mention earlier that an increase in an asset is a debit and an increase in a liability is a credit. So we have to debit inventory and a credit on the accounts payable with the relevant amount. To make a complete journal entry, we need to include a reference number, also known as the journal entry number, the date of the journal entry, the account column where the names of the relevant accounts affected are shown, then two separate columns for debit and credit, and a description of the journal entry. So this is what a journal entry would look like for our example. Now let's look into some more transactions to be journalized and see how they are transferred to a ledger and produce a trial balance thereafter. Harvey Limited has opened a business with a starting capital of $150,000 on 1st December 2020. This means that £150,000 has been given to the company, which is an increase in asset and the equity. So, to record this transaction, we simply debit cash of £150,000 and credit capital with the same amount. On 12 January 2021, the company purchased furniture for £18,000. A furniture is an asset, so there is an increase in asset, then cash was decreased having paid for the purchase, which is also another asset. So we debit furniture and credit cash, both for £18,000. Purchase office supplies on credit, which is $8,000 on 15 January 2021. The purchase was on credit, so it means that this is an increase in accounts payable, which is a credit, and we debit office supplies, which is presumably a current asset in the example, both for £8,000. Then, paid salaries expense $5,000 on 31st January 2021. Paying salaries is a decrease in cash, so we credit cash of £5,000 and this is an increase of expense, so we debit salaries expense also with £5,000. Partially paid office supplies of $3,000 on 17th February 2021. This is linked to the purchase made in January, which is a payable. So since the company has partially paid for $3,000, this is a decrease in its accounts payable. Therefore, we debit accounts payable by £3,000 and we credit cash of $3,000 having done a payment. On 1st of March 2021, the company sold items to customer B worth £13,000. 50% was paid in cash, the remaining as receivables. So selling items is an increase in equity. Therefore, we credit sales of $13,000. 50% was only paid in cash. Therefore, we only debit cash for $6,500, being the 50% of $13,000. And the remaining 50%, which is also $6,500, is debited also for accounts receivable, since this amount is to be received in the future. Paid the monthly rent of $12,000 on 30th March 2021. Paying rent means a decrease in cash. Therefore, we credit cash for $12,000. Then we debit rent expense for the same amount. On 1st April 2021, customer B paid $2,500 for the items bought in March. The company has a receivable from customer B for the sale in March. So since they paid $2,500, this is a decrease in its accounts receivable, thus the credit. Then a debit on cash for $2,500 since a payment is received. So this is what the general ledger for Harville Limited should look like. Take note that debit balances must always equal credit balances. Each of the journal entries moved are posted to the individual accounts in a ledger. A debit in a journal entry is always a debit when transferred to a ledger. The debits and the credits of each account are totaled, and the difference is the balance of such account. For example, in the cash account, the difference is a debit of £126,000 after deducting the debit and credit balances. After knowing the balances of each account, we can now prepare a trial balance, which is a list of all general ledger accounts along with their debit and credit totals. So this is what a trial balance for Harville Limited should look like. The accounts are listed in the order of assets, liabilities, equity, dividends, revenues, and expenses.
So again, the debit and credit balances must be equal. But it is important to note that even though the debit and the credit balances are considered to be equal, it does not mean that there are no accounting errors. So for example, an asset might have been recorded as an expense. So even though that the balances would show that they are equal, it does not mean the information is reliable. Adjusting entries are usually made at the end of the accounting period to record for any economic activity that might have taken place but have not yet been recorded. Examples such as prepayments, deferrals, and accruals. So, the adjusted trial balance is produced, and the information from this is used to produce financial statements. The lesson on financial statements would require a separate lesson, and therefore I would need to create another video to cover that. So there you have it, guys. I hope that you've learned something from this video. Thanks for watching.